It is just amazing how many pieces are in the puzzle of home loan interest rates and how many players are involved. So, yesterday we were talking about the effects of the UN asking the Federal Reserve to stop raising interest rates. And now today we're having OPEC, who manages oil production overseas, say that they are going to cut oil production. And now we're seeing how that is affecting home loan interest rates. Today is October the 5th, 2022. It is now 3:19 p.m. Welcome back to the Brent Bruce Daily. Make sure that you like, subscribe, and share this information. So, how is it that OPEC is affecting home loan interest rates? Well, when you really think about it, it's not even, and you think about the things that we talk about nearly every day, it has to do with inflation. And when we look at both the personal consumption expenditure and the consumer price index, we're always talking about either the headline number or the core number. And if you've been watching along, what is the difference between the headline number and the core number? The core number takes out food and energy. So energy, obviously, the biggest piece of energy that we really feel is gasoline production or diesel production for our vehicles. So when OPEC decides to cut oil production by 2 million barrels, that causes inflation because it reduces the amount of inventory we have, so you pay more for it. Now, I understand that in California right now, gasoline is what, $6 a gallon, $6.20 a gallon, and here in Tennessee, where I live, it's about $3.09. So with this, we're going to expect gas prices to go up quite a bit, but that is now causing inflationary pressures that will then roll over into the CPI and the personal consumption expenditure. So what's happening to our home loan interest rates? Well, what do you know? When you hear something that is inflationary, home loan interest rates do not like it. Down 50 basis points today. Remember, we had a good day yesterday, the last couple of days, but we had a very bad day so far today. So kind of banged up against this ceiling, broke over it for a little bit, and now really getting pushed back lower. That's especially, not a surprise when you think about when you hit ceilings of resistance or floors of support. Usually the market takes a look around and says, okay, we've had a run up or down. What's going on? And they take their cue from something that happens or something that they're hearing. Well, we have employment and jobs numbers coming out this week, which we heard a little bit of today. And those numbers came out with incomes increasing by 7-8%. Well, that's inflationary. So that is two things, both oil production cuts and the employment numbers that are inflationary. So home loan interest rates are responding, down 50 basis points. Look at the 10-year. Yesterday, we were celebrating a little bit of a drop in the 10-year, up 13 basis points, going back and starting to threaten us at that 4% number that we do not want to be around. So what does this mean to our home loan interest rates? Let's take a look at the Brent Bruce Daily scenario. Take a quick look at this here. Again, this is the very well qualified conventional 30-year fixed mortgage. I'm going to open up the parameters here for you to take a quick look at for me to make sure that I am in compliance. Let's go ahead and run California numbers today since we mentioned California fuel prices. 91730, a Rancho Cucamonga zip code in San Bernardino County. We'll submit this. Now, these numbers, whether you're looking at this really anywhere in the nation, but primarily my people that are watching this are in Tennessee or California, the pricing is the same in both. I price my business the same. So 6.625% with a little bit of a credit coming back. So again, this is up from yesterday, which is a response to our mortgage-backed security market having a little bit of a sell-off, not liking the information coming from OPEC on reducing oil production. So you better be ready. Gas prices are going to be going up in the coming days. So make sure you fill that tank. And also the numbers coming out about income and overall income increasing year over year, which is inflationary. That's wage-based inflation. We talk about it all the time. Make sure you go back and look at some of the other videos if you're not sure what I'm talking about. I will get back with you again tomorrow. We'll take a look and see what is happening. More employment numbers and income numbers are coming out tomorrow. What do you think is going to happen? Think about it. I will get back to you and let you know what we've got going on tomorrow. Have a great day.